Are you leaving money on the table? Learn how to maximize your tax refund with these year-end tax strategies. Whether you're a seasoned taxpayer or just starting out, this training will offer valuable advice to help you make the most of your hard-earned cash. From deductions to credits, we'll cover it all. Get ready to boost your refund and start the new year off right. Make sure to like, comment, and subscribe for more informative content. Hello and welcome to the Confident Wealth Solution, where we deliver proven strategies that help you confidently create, expand, and manage your wealth. My name is Karen Kitt. I'm a retired teacher with over 13 years of experience in the financial services industry. Today, I'm going to share some easy tax strategies that will help you get the biggest refund possible this year. However, you must review these strategies with an accountant or tax preparation professional so you can plan for your future with confidence. When it comes to taxes, most people think about them as a necessary evil, but the truth is, with the right strategies, you can actually maximize your refund and get more money back in your pocket. And who doesn't love that? So, whether you're someone who's self employed or you work a traditional 9 to 5 job, you'll be able to apply these strategies to your own tax situation. The key is to be proactive and plan ahead. By taking advantage of certain tax credits and deductions, you can significantly impact the amount of money you get back. One of the most important things you can do to maximize your refund is to maximize your deductions. This includes things like charitable contributions, mortgage interest, and even state and local taxes. When it comes to deductions, it's all about being intentional with your spending. By making a few simple changes, you can actually increase the amount of money you're able to deduct, which will ultimately lead to a bigger refund. Another key to focus on is tax credits. These can be even more powerful than deductions because they actually directly reduce the amount of taxes you owe. Some common tax credits include the Earned Income Tax Credit, the Child Tax Credit, and even education credits if you're a student. In addition to deductions and credits, optimizing your retirement contributions is another way to maximize your refund. This includes things like contributing to your 401k, 403b, or an IRA, and even taking advantage of catch-up contributions if you're over age 50. By optimizing your retirement contributions, you can actually reduce your taxable income, which will lead to a bigger refund. It's a win-win. Health savings accounts, or HSAs, offer another way to maximize your refund. HSAs are tax advantaged accounts designed specifically for medical expenses, and they're one of the most powerful savings vehicles if used correctly. What makes HSAs unique is their triple tax advantage, meaning contributions are made with pre tax dollars. Any growth or investment earnings in the account are tax free, and withdrawals for qualified medical expenses are also tax free. This triple tax advantage can save you a substantial amount in taxes, which is especially valuable in retirement when every dollar counts. To be eligible for an HSA, you must be enrolled in a high deductible health plan, HDHP. The contributions you make to the HSA every year can be invested in a variety of options, such as mutual funds, allowing the account to grow over time. Many people don't realize that HSAs, health savings accounts, can function almost like a medical IRA, where you can let your contributions grow tax-free and only withdraw them in retirement to cover healthcare expenses. When it comes to applying these year-end tax strategies, it's all about being intentional with your spending and your tax planning. By making a few simple changes, you can actually increase the amount of money you get back from the government. For example, imagine you're a freelancer who earns $50,000 per year. By taking advantage of deductions, credits, and optimizing your retirement contributions, you could actually increase your refund by several $1,000s. Or let's say you're someone who's getting close to retirement age. By taking advantage of catch-up contributions to your retirement accounts, you could actually reduce your taxable income and increase your refund. Remember, these strategies are designed to be flexible, so you can apply them to your own unique tax situation. Regardless of which method you choose, the key is to take action and start applying these strategies to your own tax situation. Now, as you start implementing these strategies, there are a few common mistakes to avoid. One of the biggest mistakes is waiting until the last minute to do your taxes. This can lead to missed deductions and credits, which can ultimately reduce your refund. Another mistake is not keeping track of your receipts and documents throughout the year. This can make it difficult to take advantage of deductions and credits, and it can even lead to tax audits if you're not careful. By being proactive and planning ahead and working with your accountant or tax preparation professional, you can avoid these common mistakes and maximize your refund. So, what's next? Take action and start applying these strategies to your own tax situation so you can reach your financial goals with confidence.